Hey, what's up guys? This is Taylor from Simpler Trading. So in this video, both Chandler and I, we're going to tag team you, the Horton brothers. We're going to hit you with our top 5 trading tips for swing traders and day traders. But at the end of the video, make sure you stick around because we got a big announcement. As a lot of you know, we recently crossed 10,000 subscribers just about a few weeks ago. So to celebrate 10K, we're going to do a giveaway. So we'll announce the giveaway at the end of the video, but we want to thank you guys for all your support over the years, all the continued support as the channel grows. But without further ado, here are our top 5 trading tips, and stick around for the details on the giveaway. Alright guys, so I'll get things started here. Tip number 1, don't fall in love with the stock, fall in love with the setup, right? Fall in love with your dog, fall in love with someone who treats you right, but don't fall in love with the stock. What I mean by that is, if you think of like the 2020-2021 market, a lot of that was led by technology stocks and semiconductor stocks, but it wasn't so much the stocks, it was the structure and the trend. So obviously, the market changes a bit this year. That good structure, that good trend, as far as the upside, it hasn't been in big tech, it hasn't been in the semiconductors, but if you know where to look, and again, if you fall in love with a setup versus a stock, that kind of quality trend has been all over the place. U.S. soil is one perfect example. Since January, this has been in a beautiful uptrend. So USO this year looks a lot like Apple, Amazon, Tesla, Nvidia from 2021-2020. Same kind of quality trend, it's just a different name. So fall in love with that kind of structure, not the stock itself. The energy sector has been another example. We've traded a lot of energy this year, not because we're fans of energy stocks, but because we're fans of that kind of trend and structure. When we have that kind of structure in Apple, we're going to trade Apple. When we have it in Facebook or Google, we'll trade Facebook or Google. But you've had it in energy. You've had it in U.S. oil. You've had it in UNG, which is natural gas. So that is tip number 1. Fall in love with the structure. Fall in love with a high probability setup versus falling in love with the stock. Because sometimes your stock is going to be very supportive of the move you're looking for. All right, tip number 2. If you're not already, be open-minded to exploring credit spreads. I think for a lot of us, when we first start to trade options, we're buying calls, we're buying puts. It's kind of like the basics. Credit spreads can be pretty powerful if you know how to utilize them. So like this week alone, I did one put credit spread here on the S&Ps. Basically selling the 4100 put. Not even looking for an explosive move, just looking for the S&Ps to hold above 4100. And today that put credit spread, that expires at max profit. That brings in, nice $600 or $700. Call that an income trade. Did another put credit spread here on Tesla. So I'm selling these out the money puts on a setup that I think, based on the structure, has got the potential to move higher, of course, but because I'm doing the credit spread, don't necessarily need that big directional move. So with Tesla today, Tesla brings in about 1300, and then I got another one here on Valero. And if that goes smooth, that brings in a nice $400 or $500. So if you look at a structure like Valero, this trade was based off of the hourly chart and the hourly squeeze. So I'm bullish on the hourly squeeze. The bet I'm placing is technically, I think the squeeze trades to the upside. I think we're going to trade higher. But instead of buying those calls, I'm selling that 130 put credit spread. So when it trades sideways, it pulls back a little bit. I'm still in good shape. I'm not worrying about premium decay working against me. Rather, it's working in my favor. So, regardless of account size, if you've got a setup you like, going back to tip number 1, fall in love with the setup. If you've got a setup you like, explore trading that with credit spreads. It adds a little bit of edge if you can get the timing right. So that's tip number 2. Trade your go-to setup of strategies that offer a little bit of edge, especially in volatile markets, versus being strictly hell-bent on buying calls and buying puts. A good way to look at it is there's a time and a place. And then guys, tip number 3 for me is going to be an important one here. Take your watch list building seriously. Right? You should be approaching your trading like it's your business. Your watch list, that's your potential business opportunities. Those are potential business transactions that can make your business money. But when it comes to building a watch list, like everything we do, we want to be focused. Right? After all, it's focused trades. But when it comes to building your watch list, you want to build your watch list based off of your go-to setup. So you can kind of see the theme here with all the advice. You want to have a setup every day full of your go-to setup. Look at that as the pond you're going to fish from. You only want to stock that pond with your go-to opportunity. So, I know a lot of you are familiar with my kind of trades. If you look at the things on the watch list here, it's LMT. Setting up in a nice daily squeeze, it's names like AEP. Nice daily squeeze, you've got names like XEL. That's an hourly chart. Alright, nice daily squeeze. So my watch list, the only thing I have in there are my setups. Not the stock of the day, not the latest, Wall Street bet sensation. If I've got 15, 20 names on my watch list, that's going to be 15, 20 of my go-to setups. Bullish and bearish. So some pretty simple advice from me, guys. Fall in love with the setup, not a stock. Be open-minded to trading your setup with some, different strategies. Credit spreads are great. I like debit spreads. I even think butterflies, they got a time and a place. As an options trader, don't limit yourself to just calls and puts. There's a time and a place where different strategies offer different edge. And then again, the last piece of advice here, guys. Looking at XEL, looking at a name like a UNG, looking at something like the energy sector, something like US oil, they all look the same. For me, that's my go-to setup. So every morning I gotta make sure I wake up with a big watch list full of examples of nothing but the go-to setup. So those are my 3 tips. I hope you found them helpful, and now Chandler will take it from here.
Hey traders, this is the Chan Man, and I want to give you a few tips here for all my option day traders. And there's really going to be a few tips, guys, all in one lesson here. And what we're going to talk about is how to time your entries, talk about buying high and selling low, aka shorting high and getting out at the lows. And I want to give you a tip into insights of how to select strikes and how to observe the option premium to, again, get optimal entries. So I want to just dive in, guys, to Shopify here. This is an example of a trade that I actually took today. This is on Friday, so you guys can go back and review June 3rd. But again, here's the lessons, guys. And because we've been in a bear market, I simply just want to focus on shorting pops. Or when we're in bull markets or just looking to play upside, we want to be looking to buying dips. But an important thing, especially as an options trader, is making sure that we are not chasing lows and we are not buying inflated premium. However, with a little bit of patience, truly, guys, can turn a trade into a totally different outcome. If you are patient, wait for your pitch, and understand that if you get a good entry, it truly makes all the difference. So here's an example, guys, on a Shopify trade that I had today. And here was the thesis, where if Shopify is under this key zone of 383, I'm going to look to short it back down towards 355 to 360-ish. So let's just start, guys, with, what are the tips on how to select strikes? Whenever it comes to selecting option strikes, I always focus on, personally, same week expires because they move the best, but I also focus on strikes that align with my targets. So coming into this trade, I was focusing on anything near 370 to 360 when it comes to Shopify puts. So either the 360 puts or the 370 puts. Finding a strike that has the possibility to work its way from out of the money towards in the money. That is where you're always going to find your best bet when it comes to trading options, this style. And so here's a few lessons, guys. Shopify opened right at this key level, and then it immediately dropped. And for a lot of traders, this is something where they kind of panic. They think they missed the trade, and then they come in here and buy puts at the lows, and that is just not appropriate. And so again, we want a mentality and a system where we are ready to short pops and have levels that pops can go to so we can look to get an entry. And one of the few things that I like to use, guys, besides my major zones, is things like structure, VWAP, and cloud. So as you can see, when we had that big drop here to start, we hit a beautiful key level. And whenever we start to hit major key levels, you are going to get, guys, those pops back to other levels so that traders can reload and get in the opportunity flow. So instead of acting like, or acting emotional like you missed this drop, it's more so a chance to get a little bit of more confirmation that your thesis is going to unfold. And I think that's important. Where if shop just kind of sat at, that 380-ish range for a little bit, you don't quite know what's going to happen. But once you get a big drop, that kind of tells you, hey, they're here to sell shop. Now on a pop, I can look to get an entry. So again, guys, a few things I like to use are the Ichimoku Cloud and VWAP. So as Shopify started to pop back near these key ranges, this is where I look to grab an entry on these puts. And another lesson for you guys is observing the puts that you are looking to trade, or just the option that you're looking to trade, on a chart. So this is a chart of the 360 put on Shopify. And another reason that I love to have these up is I get to visualize where the best place to buy the option would be. So again, we want to short the stock at high, but we want to try to buy the option near the lows instead of chasing over price premium. Because even if you guys chased this and bought puts at the lows, you could still make money as the trade goes lower. But like I had mentioned, a few little tweaks in execution, a little bit more patience, man, it can go a long way. So as Shopify guys neared this key level, looking to give me my entry, I also noticed that yesterday, the Shopify puts kind of started to base around this dollarish range. And in the morning, they immediately bounced off $1 and went towards 3. Nice percent return there. So this is how we start to size things up. If I can get a pop on Shopify back to where I'd like it, and I can get the option close to its support, that's a good place to look to enter this trade. So around these levels, guys, it was around $1. And that is where I grabbed those Shopify puts. And as we start to roll to those targets, lock up a nice trade near the highs of the premium for about 100+% return. And that is how we avoid buying lows, getting stopped out, and how we can get better entries by looking for pops back to key levels after some prices confirmed your thesis. And then again, diving in here, guys, putting those options on the chart and finding those good risk reward places to buy your option contract, and then a good place to look to scale out of that option contract. So this is a beautiful example of buying low, selling high, shorting high, getting out low. I hope that makes sense, guys. And that is my tip. This is for all those day traders and option traders out there. I promise you guys, if you make these few tweaks of being patient, understanding you're not missing trades when they drop or pop super hard, they're more so just going to set up a beautiful opportunity here, make a nice little flag, give your entry at the highs, and you maximize those premiums. So I hope you guys enjoy these tips. But as Taylor hinted at earlier, we are super excited to announce that we will be doing a giveaway for all of our Focus Trade subscribers. And the team here at Simpler Trading, we are offering 3 winners their choice of a 30-day free trial to either Taylor's Compounding Growth Mastery Program or a free 30-day trial to the Simpler Day Trading Room. We'll get to the rules here in a bit on how to enter, but let me give you guys a rundown of, what's actually in the prizes. So with Taylor's Compounding Growth Mastery, you guys are going to get access to Taylor's Trade Alert service. You're going to get exclusive access to the live breakout room with the weekly live trading sessions, instant real-time alerts with defined entries and exits, the whole game plan, and an interactive Q&A with the team man himself. Who's this for, guys? This is great for those that are looking to follow Taylor's swing trading strategy, start to master those spreads, and obviously get his trade alerts. Or maybe you're more interested in day trading with the Chan Man, and that is where the Simpler Day Trading Room, that consists of our 4 day traders here at Simpler Trading, and you guys will get access, right? The winner will get access to the live trading room that's open from 8:20 Central to 11 a.m., and then we reopen later in the day from 1:30 to 3 p.m. Central, really just capturing the peak trading times during market hours. So again, if you're more of a day trader and you want to join me and the other day traders for live trading daily, this is a great chance to get a free month of access to the room. So let's talk about how do we enter. So we have 3 rules to enter to get into the giveaway. The first rule, subscribe to the Focus Trades YouTube channel. So if you guys haven't already, please hit that subscribe button. We'd appreciate it. The second rule, make sure you guys like this video and you comment #Focus Trades down below in the comments. And then the third and final way to enter this free giveaway is to just visit the link in the description below, or you might see it pop up on the screen somewhere here, and you guys can click that and sign up for the free Focus Trades newsletter. So you can join our squad, get that free value, guys, and enter that giveaway. And once you submit your email, that's when you'll be entered to win, again, either a choice of Taylor's Compound Growth Mastery or a free month in the Simpler Day Trading Room with me, the Chan Man. The giveaway ends on Monday, June 27th at 12 p.m. Central Time. 3 winners will be randomly chosen and announced on that Tuesday, June 28th. The winners will be emailed directly from myself, Taylor, somebody at Simpler, and you will have 72 hours to claim that prize for either, again, a free 30-day trial to Taylor's Compounding Growth Mastery or the Simpler Day Trading Room with myself, Chan, and all the other day traders. So again, I want to thank you guys for supporting Taylor and myself on our trading journeys. It is super rewarding to trade alongside you guys, get better daily, and provide as much value as we can. I want to wish you guys good luck on the giveaway, and I will see some new faces soon. Cheers.
Hey, Focus Chan here with Simpler Trading. Thank you guys so much for watching this video. If you enjoyed it, please make sure you like, comment, subscribe, turn on notifications so you don't miss anything that we do. And if you want to see us trade our money live in real time, go to simplertrading.com and you can sign up for more. But happy trading, guys. Stay focused. I'll talk to you in the next video.